All right, let's talk about one of the market's biggest head scratchers right now. It's a company called Polibeli Group, or PLBL for short. And honestly, it's a story about a valuation so huge, it doesn't seem to make any sense on the surface. So yeah, let's get into it.
Okay, so let's just put the big number right out there. $3.7 billion. That's the market cap for a company that just went public, and you better believe it's got a lot of people asking questions.
So what does this nearly $4 billion company even do? Well, they're a digital supply chain platform in Indonesia. Think of it this way. They help all the small local shops get their hands on products to sell. You know, stuff like electronics, beauty supplies, that kind of thing. It's a business-to-business model. Pretty straightforward.
Okay, Section 1, the billion-dollar mystery. We really need to figure out how a company like this ends up with such a mind-boggling price tag right out of the gate.
All right, let's get the basics down. Polibeli listed on the Nasdaq in August 2025. But here's the thing. They didn't do a normal IPO. Nope, they merged with what's called a SPAC. And you're going to want to remember that little detail because it is super important for understanding this whole situation.
And now we get to the real heart of the matter, valuation versus reality. This is where things start to feel, well, a little bit crazy. It's the core of the whole paradox.
And here it is, laid out plain as day. On one side, you've got this massive, almost $4 billion valuation, and on the other, about $30 million in yearly revenue. That's not just a gap. That is a full-blown canyon. It's staggering.
Let's put a number on that gap. We're talking a price-to-sales ratio of around 123. Now, if you follow stocks, you know that for any company that's a wild number. But for a distribution business, it's off the charts.
And if you need to see it to believe it, check this out. There's Polibeli, way up there at 123. Now look at its peers. You've got a super fast-growing company like PDD Holdings sitting at 3, and a massive player like JD.com, they're at 0.3. It's not even a fair comparison. They're not playing the same game.
Okay, so maybe the financials can explain this, right? Maybe there's something amazing under the hood. Let's pop it open and take a look with a quick financial health check. Okay, here's the first thing that jumps out. Yeah, revenue growth is okay. It's at 32%. But, and this is a big but, their losses are growing even faster than their sales. That is the exact opposite of what you want to see.
And a huge reason why is this number right here. Their gross margin is just 3.8%. So what that means is, for every dollar of stuff they sell, after they pay for that stuff, they're left with less than 4 cents. That's practically nothing to pay for salaries, marketing, rent, everything else. Forget profit. And what happens when your margins are that thin? You get cash burn. They are literally burning through about $5.7 million every year. The money going out is way more than the money coming in.
But maybe the scariest number of all is this one, 0.03. That's their Altman Z-Score. And if you're not familiar with it, just know that 0.03 is, well, it's about as low as you can get. It's a massive red flag.
So, real quick, what is that? The Altman Z-Score is basically a formula that predicts how likely a company is to go bankrupt in the next couple of years. A score under 1.8 means you're in the danger zone. Polibeli's score, 0.03. That's not just in the danger zone, it's deep, deep inside it.
Okay, so the financials are clearly not the reason for this valuation. So what gives? Well, now we have to look at how this company went public in the first place. It's time to decode that SPAC structure.
Which brings us right back to that huge question. How on earth can a company with these numbers be worth almost $4 billion? The fundamentals don't add up. So the answer has to be somewhere else. And it turns out it's not in the business, it's in the deal.
So here's how it went down. A SPAC gets created, it finds Polibeli and says, hey, let's merge. But then, right before they get to the finish line, something major happens. The early investors in the SPAC basically bail. They redeem their shares and take their money back. And that changes everything.
And I'm not talking about a few people getting nervous. Look at this. Investors pulled out $230 million. That's a huge chunk of the cash that was supposed to go to the company. Almost 3/4 of the money just vanished from the deal. So Polibeli ended up with way less cash than they planned. So what's the result of all that money being pulled out? You get what's called a low-float stock. The fishbowl analogy is perfect here. Imagine most of the water is gone. Now, if you just touch the water, you create a huge splash, right? It's the same idea.
There are so few shares actually available to trade that a tiny bit of buying pressure can send the stock price flying. The valuation has nothing to do with fundamentals anymore. It's all about momentum and the story around the stock.
Okay, so that explains the how. But what about the what's next? Where does this all lead? Let's talk about the future. Is this thing going to boom, or is it going to bust?
Really, there are two completely different ways this story could end. The bull case, the optimistic view, is that the company grows like crazy. We're talking 60–80% a year, and eventually the business actually becomes big enough to justify the price tag. But the bear case is the exact opposite. Growth slows down, investors lose interest, and the valuation comes crashing back down to reality.
And there are some serious risks on the horizon you've got to watch. First, they're probably going to need more cash, which means selling more stock and watering down the value for current owners. Second, there's a lockup expiration coming in 2026. That's when a ton of insiders can finally sell their shares, which could flood the market. And you can bet that their next earnings report is going to be one of the most closely watched documents on Wall Street.
So in the end, we're left with that $3.7 billion question. Can Polibeli actually pull it off? Can they grow fast enough to outrun this insane valuation? Or is this just another case where financial gravity, eventually pulls everything back down to earth?